Good afternoon, sir.
This is episode 77 of the Beef and Bitcoin podcast with your host, Brett and CH. Today's topics: Lebanon looks like it's defaulting on its bonds for the first time in history. So we'll talk about that and some of the other countries with an absolutely absurd debt to GDP ratio. The oil wars are back on. We talked about this last episode for a few minutes, and I thought it was a good point to touch on again for this episode because our boy Dan Tapiero made a really interesting point about the petrodollar potentially breaking and what does that look like and mean for the global economy. And then last but not least, New York. There's a power plant in New York that started mining Bitcoin. Looks like they're mining $50,000 worth of Bitcoin per day. And the reason I threw that topic in was just because of the entire energy sector basically taking a shit for the last couple of weeks here. Some of these energy generation facilities are going to need to find another way to offset their expenses if energy demand continues to decrease. But yeah, man, how's it going?
Going good. Again, just every day, every hour that ticks by, it just seems like everything is imploding in front of us. Like the oil thing, just another example. Like the Middle East, like Saudi shares, Kuwait shares, just dropping like limit down like 8%. Just the most ridiculous thing. Like it's not even real. I'll pull up the chart if you're watching on YouTube. This is a daily stick, and it's just down 8.32%. That's pretty rough. I mean, it is incredible to see just the whole of the macro. It's just, I don't even know how to put it in words. Do you know how to put it in words right now? What's going on with everything?
I don't, but it's it is amazing to watch in real time. I feel like that one CNN clip, a meme, I think I made it, where it's like slow motion explosion. They just kept saying it over and over again, and it's
slow motion train wreck. I guess.
What do you think? Let's jump into the Lebanese bond default, and I think this is an interesting topic because it's something that everyone, at least in the Bitcoin space, has been thinking about, as the debt to GDP ratio is just at all-time highs for many, many countries. When you think about what your options are to get rid of that debt, there's only a few, and we'll touch on that here at the end. But so to go over the Lebanese bond default, the Prime Minister, Hassan Diab, has announced that they're unable to pay their $1.2 billion Euro bond that's due tomorrow, actually, March 9th. And this is their first default, and they've been dealing with a crisis over there, an economic crisis. It seems like for the last year or so, it's gotten pretty bad. I know Nassim Taleb tweets about that pretty frequently because he's native of Lebanon, and their currency has fallen 40% in the past year or so, which is mind-boggling. I can't imagine watching my own currency fall by that much and having to deal with the consequences of that. So their debt to GDP ratio is also 170%. So they have 170% more debt than their actual GDP, which is, it really is mind-blowing to think about numbers that high. And, this is the first default of many potentially. But to get back to what I was saying earlier, when you have debt of this magnitude, just globally, there's only a few options you have, right? One is defaulting, which very rarely happens. The other thing that governments can do is to cut spending, which never happens. And then, last but not least, and I think this is what everybody will eventually do, is you just inflate away the debt, right? You inflate the currency, you devalue it, and you inflate away the debt. And my guess is more countries will start leaning in that direction in the future as the debt just gets absurd and markets look like they're continuing to crash here. I don't know. I wanted to hear what you have to say about that. My guess is people start inflating away the debt.
Free IMF money. That's
right.
I mean, it's that simple. I mean, we live in a time of free money. I'm sure something will be figured out. They'll give them a negative interest rate loan, dude. What more could they ask for?
Right.
Who knows? That's what I'm thinking right now, though. But like we're in the free money situation. I mean, people are, as we covered the other episode, it blew me away when I saw it. It was like when I was watching Bloomberg like a few days ago, and it was like helicopter money, and I was like, holy shit, they're actually doing this in Hong Kong. They're just giving people money literally just to try to do anything to stimulate the economy because they've had riots there for months or protests, whatever we want to put it. It's probably more like the protests, but there's been considerable amount of tear gas, beatings, etc., craziness. And then on top of that, now you have the coronavirus, so everything's dead. Tourism dead, and you look at it, and they're just throwing money at the problem, and that's not helping. Like people aren't going out now.
Right. And the thing with throwing money at the problem is it just increases the amount of inflation that works its way back into the economy, and the holders of the money really don't benefit from that. So you could be used to paying, a couple bucks for your coffee or whatever, and now it's $10 for a cup of coffee 3 to 5 years later, and you're like, holy shit, like what happened to my money? I certainly haven't gotten 100% raise in the last 5 years. So it's you don't realize these things until it happens, just as we've seen the prices of goods and services increase even since we were kids, or that you started paying for things on your own. Maybe you were going to the movies when it was $7 for a movie ticket, and now it's 15 or sometimes even 20 depending upon where you go. There is a consequence to that.
Dude, look at the Hong Kong dollar. It broke down finally from that peg.
Yeah, and I think that's a good segue into the next topic about the oil wars. And this is interesting because we really just talked about this on the last episode, how oil producers, we were talking about that thread from the oil producer in Texas who was like, yeah, I'm definitely concerned here because oil prices are dropping significantly, and they still need to increase the supply of oil because they have to sell as much as they can just to cover their expenses, pay their employees, et cetera, cover their debt. And now you have Aramco basically slashing their crude oil prices as OPEC basically is flopping here. And if the cartel on oil pretty much breaks, then people are going to just cut oil prices as much as they can and see who survives, I guess, the slaughter of the oil and energy markets. And Dan Tapiero made an interesting point, and I hadn't thought about this even when we discussed it yesterday. And he said, if there were ever a time for the Middle East currency dollar pegs to break, this is it. Saudi, Qatar, UAE trouble, ME stock markets in free fall, Middle East, oil cartel collapse, China recession, no bottom for oil, fiscal revenues to drop, new reason to own gold and Bitcoin. So, it's really interesting listening to a guy who's just has so much experience in the global macro markets, and he's been a gold guy for a very long time, and he can see these things playing out. And it didn't cross my mind to say, oh, why, if you're going to crash oil now and switch to get rid of the petrodollar, maybe now's not that bad of a time to do that. What do you think?
Yeah, I think we're seeing a collision of the fiat currency system. It's meeting a wall, and people are going to scramble for hard assets, or hard money would be the best way to put it. So whether we see a scramble back to gold-backed money by governments and see obviously a lot more interest in Bitcoin, I'm sure we'll see that eventually. And again, price will drive adoption. And you and I always talk about near term. People worry a lot about price, and you're really good with this. You're better than me. People worry about price way too much in near term. We've seen ridiculous moves in Bitcoin before, and when Bitcoin goes up 4 or 5% and then goes down 4 or 5%, that's very normal. But
right,
you watch crypto Twitter go insane and flip sides just every time it goes bullish, bearish right away. It's just funny to watch the sentiment switch so much.
Yeah, we've talked about the sentiment so many times, and I like bringing it up because it's a good market insight from a very retail-driven market. It's so different from all the other markets. I mean, let's be honest. The average person hasn't bought a stock in their personal account in a decade, probably. Yeah. It's all Vanguard funds, your 401k, passive investing, or maybe people buying, into ETFs and stuff like that, maybe. But the reality is it's all passive investing. And the cryptocurrency market and Bitcoin, it's really retail driven. And it is amazing to just see how quickly the sentiment can flip flop, whether it's from, a 10% pump or a 10% dump. And we actually just saw a huge dump in the last 24 hours or so.
Yeah.
And it's radio silence for some people, which is honestly to be expected. I wouldn't expect anything less. And you can see some people calling for really low prices. You can see other people who are excited to buy the dip. I mean, there's a complete division in how people see this thing playing out, depending upon what your investment thesis is, right? So many people buy, like to buy the dip or buy the pumps, right? People get excited when it's pumping and they're FOMOing in. I think that's something I really want to talk about more, especially as the year goes on, prices change. Eventually you break 20K, you'll be able to smell the FOMO in the air and people kind of loading up. But they're not so bad. They're not interested right now, right? Nobody's interested. Bitcoin is the one thing that is you can tell people do not want to buy unless the price is higher. They're making new all-time highs. Nobody's interested in buying it on either on the way down or averaging down or whatever the case may be, because they're petrified. And I think you can see that's kind of that retail driven mania where it's a different investor mindset compared to maybe a professional investor who would enjoy cheaper prices. I don't know.
Dude, just look at my screen. Like if it did really break 20K, it will start to look retarded. And if it gets to like, I'm just using 100,000 as a hypothetical number because that's the number, next big digit, that's a 6-digit number. Right. It's going to look ridiculous again. It's going to be mind-boggling.
Right. And especially when you're not using a log chart, it looked like you almost can't imagine it going that high. Yeah. And that's where I was listening to a podcast the other day with Bitcoin Tina, and he was just like, people didn't imagine people who were buying in 2016 or even early 2017, nobody thought it would actually go to 20K. And when you're looking at these charts, not in log form, even Raul Paul sold at 2,000. He's like, I'm out, forget it. Like and it probably the chart probably looked insane to him. He's like, there's no way it's going to double to 4,000 or 8,000.
He might have been looking at this and been like, oh fuck.
Yeah, this is what he was seeing. If you're watching this on YouTube, he's looking at this and he's like, you know what, $2,000, I'm out of here. I mean, this thing's going parabolic, and then it basically 10x'd from the point that he sold. And he's a professional. He's been investing his entire life. I mean, now don't get me wrong. I think he was saying, he's like, well, I bought at 200 and sold at 2K. So, don't get me wrong. His returns were
10x and 10x. And what kind of money was he? If it's $1 million, he just made $10 million. It's like, okay, fuck this, dude. Like, he's just like, fuck this. Like, why? He's like,
why wouldn't you sell?
Yeah. No, that's.
And, that's where, again, it's prices end up going to places where you don't think they can, whether it's Bitcoin, whether it's stonks, whether it's interest rates, things go to places you do not expect. And it only punches you in the face until it actually gets there. Like I'm just waiting for the day when Bitcoin breaks 20K and we're like, oh, we got to record right now and talk about it, because you almost wouldn't. It's like, I can't believe it. Like, deep down, if somebody were to ask me, they're like, do you really think Bitcoin's going to go back above 20K? I'm 100% certain, right? I have that confidence. But the reality is when it actually gets there, I'll be like, holy shit, I can't believe it's back above 20K. Like you almost didn't think this day would ever come. So it is amazing to just see how things can change, and especially when I feel like you and I have been slightly vindicated with watching equity markets finally start to turn or look like they're rolling over. And you can talk a lot of shit we've been talking shit since probably the fourth quarter of 2018, waiting for markets to do their things and snap back to reality. Yeah. And then obviously I was blown out by the entire bull run of all of 2019, and now we're in 2020. It's rocky again, and you never know. You look at these charts, and if you're watching this on YouTube, this is an Apple chart all the way back to 2006, and it looks like it looks like a crypto chart of just like all of 2017 where these like bull runs and pullbacks, and it's
You
like,
think it's over, and then no.
yeah, it's like a 2 decade chart, and I'm like, yeah, that looks like 1 year in the crypto space. But it is unbelievable to kind of see how things have changed over, as a boomer who's been investing for 30 years. Maybe they started throwing down when they were 30 and now they're 60, and they've just rode this secular bull market. I don't think anybody actually thinks the party could end, and that's where I think it's prudent to be more careful, I guess. Like if you're about to go into your retirement years for potentially 30 years or more, how do you survive if you don't plan on going back to work? And that's where I think that's Raul's position for all of Real Vision. I think he takes that very seriously. I think besides the fact that he's selling a service of, the Netflix of finance and his investment material, I think he genuinely wants to make sure that, the Gen Xers and the boomers are at least aware of the possibility that the show doesn't go on forever.
Yeah, no, and that, I think it's a big issue. A lot of people don't understand. Like, just because something's been, like Peter LeBrant put it perfectly, just because there's this correlation in markets for years, and in this case, passive investing and just investing in things going up. Because as I've said before, like there's certain companies, like I love using the Citi chart, like Citigroup is just the perfect example of like, sure, it went up a lot. It went from in 1990, $10 a share or whatever. It went up to 565 by 2000. That's crazy. That's a huge return. It plummeted pretty hard in the recession, lost 50%, but rebounded back to 550 again. And then it dumped all the way to like pennies on the dollar. This chart, I think they did some kind of share split. It doesn't show it on here, but I'm pretty sure they did because they got down to like pennies. And they just kept doing share splits. Like, it was ridiculous. It fell 98.3%, or 98 point something percent in the span of like less than 16 months. I mean, that's like people don't understand. Like, these things can get really scary really fast. Like, stocks can and will go to zero, and that's what people don't understand. Like, there's just no way around it.
Right. I think you don't think it can happen to you. It can't happen here, all that kind of stuff. Oh, inflation can't happen here, or stocks can't go to zero, or, my bags are fine. I think it's an error to think that you are not susceptible to tail risk or black swan events, and they absolutely can and do happen.
Yeah.
On either, whether it's decade basis, sometimes it's once in a lifetime.
Yeah.
Where it happens, and you just happen to be born at a time where you were in a black swan type event, and there's nothing you can do about it. It is fascinating to be living through a time where we really may see a separation of money and state again in our lifetime over the next decades, which, for the unborn kids today, they'll live a life where, there was no fiat money potentially, or people are using gold again, or gold-backed money, or Bitcoin-backed money, or just Bitcoin, or, whatever it ends up being. But you can see that fiat is kind of on its last legs here. And I think we're pretty lucky to actually be able to watch it. It's going to be a crazy thing to study in the decades to come. Absolutely.
People don't understand like the shitstorm of volatility this is going to cause across everything, because everything we know is breaking down. What does the future hold for us?
Right.
Silver coins, maybe.
Yeah, dude.
Who knows?
It's almost like anything's on
like,
the table. That's what I think is
at least like silver coins will buy you something. Hopefully they'll be hard.
Right.
They're not as divisible unless you have like broken down pretty well. But who knows? I don't know.
Yeah.
I'm just pulling things out of my ass at this point, because who knows? Like literally, like we've seen the most ridiculous the past few weeks, and like this GE chart's a perfect example. GE was a monster, ripping through the 90s and peaked in 2000, and has never seen that high again. And the chart looks like it's going to zero. I mean, it just does.
Yeah.
And like Ford too.
Yeah.
Like, and these people don't realize, and like we've talked about before in this podcast, this is like people's like pensions that get screwed. There's people who own that stock who thought they had a very healthy retirement because their stock went up like 20x and they made a lot of money, and then all that money disappears over time, and now their stock's worth nothing. Even if they have dividends, still you've lost all that like paper net worth, gone.
Yeah, I think people are underestimating. Even the auto industry is interesting. I mean, that could really take a hurting because we saw in 2008, auto sales definitely did not do very well. And then you had cash for clunkers to try to, trade in your old shitty car for a new one to try to pump things back up. And, people really do stop buying stuff, whether it's cars, whether it's the new fridge. I've seen more people upgrading their fucking kitchen on Instagram in the last year than and I'm talking like,
because
I know people
you're of that age too, like you're totally
I know
that
people
age.
who are dropping 40 grand on a new kitchen to get the Viking range. And don't get me wrong, I like baller kitchens too. I love to cook and grill and all this stuff.
Definitely, I get it.
If I could do it, I would do it. But all of a sudden in 24 months from now, you can be like, I can't believe I just blew 40 grand on a kitchen. That probably wasn't the smartest idea, but all those things start to slow down. And there's a lot of implications because GM, Ford, even Tesla, these are, they employ a lot of people. And that's where it can get really, really messy because these people are, the expectations of growth continuing and sales continuing to ramp up. And it's funny because I was looking at GM was talking about the new Hummer that's supposed to come out in 2021.
Oh, God.
And
top signs, dude. That's such a top sign.
Your boy Jesse Colombo had made this argument in 2008, like when the Hummer, like the H2 or whatever
H2
came
and
out,
H3, dude. Those
was
things,
like was like that was like calling the top of the auto and recession. And now you have it again where the Hummer is going to come out and be electric. And, I looked at the pictures of it. Don't get me wrong. It's pretty sweet. And maybe I'll buy one in a decade, but it's kind of like a sign of the times. It's let's switch to a whole new way to power these vehicles. Let's make them expensive as fuck. People are going to buy $80,000 trucks and SUVs. They don't care. And, they will care all of a sudden when they start pinching their pennies because, things aren't, the economy starts to slow down. And that's the error that you see.
It's a terrifying cycle. And it's a terrifying thought in my head. And even now I start catching myself, I don't know if I talked this about with you, excuse me. I catch myself like, this probably won't be that bad. And then I'm thinking, like, this is probably worse because everyone's downplaying this. Everyone's thinking technical recession. Everyone's thinking this. And, like, we're watching everything shut down. And there's people who are saying this is a hoax with coronavirus. There's people saying, oh, it's not a big deal. But, I mean, we see what's happening in countries where they're just getting overrun. Things are shutting down and there's quarantines. And it'd be foolish or naive to not think that's going to happen in the U.S., considering how many cases are jumping. It's going to happen probably in Germany. It's probably going to happen in Britain. It's going to happen in a lot of major countries because they're going to have to, like, make a big change, and that's going to change a lot of things in the near term. I hope this doesn't last for a long time. I hate being right about this, but it's happening, and I'm watching this unfold. So it's not going to be good for economic. It's not going to be good for the economy is what I'm trying to get to.
Yeah. Well, after we went on that tangent, why don't we jump into the New York power plant that started mining Bitcoin? I wanted to throw this in because I think it goes along nicely with the oil wars that we just talked about, because the reality is during economic slowdowns, the demand for energy starts to decrease, and you have this power plant in New York, Greenwich Generation. They're a natural gas power plant in the Finger Lakes. They installed 7,000 ASICs and they're mining around 5.5 Bitcoin per day. Now, this is prior to the halving. Depending upon when you're listening to this, this is March of 2020. So that's around $50,000 worth of BTC at today's prices. They basically did a full reno to their power plant, $65 million. And they went from coal to natural gas, and then they did a whole new electrical infrastructure. And they also believe that they're going to remain profitable after the halving. So I'm guessing they're assuming number goes up after the halving. So I guess we'll see about that. But I think it's interesting that you have these energy generation facilities who can offset a decrease in demand for their energy by continuing their energy production and turning it into Bitcoin and just selling it. And I think these energy generation facilities, regardless of the medium that they're using to produce the energy, can kind of use Bitcoin as a bit of a lifeline, because the cost to shut down some of these, whether it be for a few hours or a day or two because there's a lack of demand, it's really expensive to shut them down and start back up again. Whereas this case, you can not do that and just mine Bitcoin and sell it and keep
your pretty profitable too.
Right.
We've seen before in the past of people mining, whether you're talking mining Bitcoin or altcoins early and then just selling them for what, 10x your bag.
Right. I mean, you could save your entire energy company if you mine. I mean, if they're mining, dude, if you're mining 50 grand worth of Bitcoin per day and the price 10x's and your facility has no demand for energy other than Bitcoin, you can stay afloat all of a sudden. And you could have these people looking like geniuses in 5 years for having built up a little holding of Bitcoin. All of a sudden you have a couple hundred BTC, and that's, however many millions of dollars. And you can stay alive. You can keep all those jobs. You can keep people employed. You can benefit and reinvest that back into your company for R&D purposes. I think eventually, I love seeing this. I love seeing mining coming back to the USA. I love seeing somebody else that I had never heard of has really taken a risk to do this. And I can't imagine it was an easy sell to their board of directors or whoever to say, yeah, I think we should mine some Bitcoin with our extra energy and just see what happens. I mean, that must have been a hell of a pitch to try to get that done. But I think they could very much, in hindsight, it will have been a very smart decision. So I don't know if you have anything else to add on that. I think it's great to see.
No, it's definitely, I think there's no reason not to. If you're in an energy company in that sense, like hydroelectric or stuff like that, and you have excess electricity, I think it's a no-brainer. It's like, why not? And as I said, it's a huge speculative thing too. If you have you're just like, okay, I believe in this currency or whatever, I believe in Bitcoin as a money or as something in the future, and the demand for it's going to be much higher, why not? Especially as you were saying, if you have a few hundred Bitcoin and that money goes up, that it goes to $100,000 Bitcoin, you're going to be pretty content with your choice of mining it for a while,
Right.
And that can obviously pay off and that's offset your, and then huge profits for the company, basically, of course.
Yeah.
Oh man, this is getting parabolic, as I said. Unless this slows down soon, we're going to be pretty sad here.
Yep.
Close to 500 in the U.S. It's just...
There we go.
Are you still flying? I don't mean to bring that up.
No, I don't know. I'm supposed to go on a work trip next week. Apparently, there will be an announcement coming out tomorrow about new company policies with flying or whether or not. So I don't know. I'm gonna have to have a call with my manager and see if I'm actually going to be flying next week. I think right now, honestly, if I had to guess, it's a 50-50 shot whether or not I'm actually going to.
I'd put money on you're not flying at this point. I think things are getting the narrative is just changing so hard and so fast.
Yeah, the problem is I'd be going and my trip's a week long almost, so a lot can happen in a week, and then do you even want to fly back when you're supposed to fly back, all that stuff. Maybe it's better to not fly at all. It's such a toss up. So
take a cruise ship.
Yeah. I think that was kind of a good way to wrap this one up. There were a couple of topics that were definitely worth touching on today, so I hope you guys enjoyed this. Make sure to like and subscribe on YouTube, leave us a comment, catch us on Apple Podcasts or Spotify, follow us there. We do appreciate the reviews on Apple Podcasts. It does help bump us up in the rankings so more people can listen to this. Feel free to share this with anybody who you think would get some benefit from it. We definitely do appreciate that, and stay safe out there.
Yeah, stay safe. Peace.